Welcome to Markets Now. I'm Michelle Rourke with Martinson Ag, and pretty much everything lower to start off with this morning, with the exception of some of the hog contracts. And Randy, grains down 2 days in a row. Today would be 3. Let's talk about some of the things that are pressuring the market: harvest and better South American weather.
Yeah, it is. I mean, rains are starting to become a little more, timely and a little more frequent in South America, especially Brazil, the northern regions and the central region. So that's putting a little pressure in on the soybean side of things. And of course, we're looking at good harvest progress as far as the expectation of really good harvest progress in the U.S. as we continue to see warmer, drier conditions pretty much across the whole continental, the 48 continental states. So that is, I think, adding a little bit of pressure into this market. And the fact that, we're starting to run into some, I think, logistics problems with, storage and a lot of product that probably has starting to come to town now.
Yeah, so you're going to get some farmers selling on that. Since we're still talking about weather, do you think wheat is trading weather or removing weather premium? We've got some forecasted rains in the U.S. and even in the Black Sea, don't we?
I think so. I mean, yeah, we've got rain now in the forecast for Russia. Argentina's getting some rain that's helping with their wheat crop. The Southern Plains has wheat or has rain in for the hard red winter wheat regions. All that I think is helping to add on to pull the wheat down a little bit. And we're getting some spillover. I mean, it's easy to go with the flow. And right now with corn and beans on the defense, it's easy for wheat to follow along. And this is adding a little bit of that selling pressure to it.
Are the funds back selling? Are they pushing the short side of the market? Did they get out of enough of their short position? They're comfortable going back short now.
They are. I mean, especially in the corn market, they were heavy sellers in the corn so far, since the report came out on Friday. And so I do think that they're starting to reestablish some positions. I don't think that they're going to go as big as they were before, but I do think that with harvest still got some time left, and it's still just the middle of October, I would expect that they will continue to add to their short positions for at least the next week to 10 days.
Yeah, and there are some money flow issues impacting the grains, really the entire ag complex, when you look at what the financial markets are doing, what crude oil is doing and whatnot, right?
Oh, definitely. I mean, crude oil's down hard. I mean, and it has been the last couple of sessions now. Part of it is OPEC has, trimmed their demand scenario for crude oil. And now we're talking with Israel is saying that they're not going to attack any oil installations for Iran. All that's putting heavy pressure in on the crude oil market. That's spilling over in a little bit, but it does tell me that, this market, the outside flow is going towards the stock market as the Dow is hitting record highs. Gold is at record highs. The dollar's recovered. So all those seem to be where some of this money is starting to go towards.
No doubt. And the dollar's been, I think yesterday hit a 6-month high. It's pulling back a little bit today, but that's been a factor too, hasn't it?
It has been. The dollar's been fairly strong, which again, kind of makes you wonder what's going on with the economy, because how can we have the Dow going sharply higher, setting contract highs, the gold setting contract highs, and the dollar rallying? That just all those three just doesn't make a lot of sense.
Let's talk technically about the fact that, first of all, November beans took out $10, closed below it yesterday, and we took out support again this morning. Where do we have to hold here now, or do we go back to the contract lows at what, 9.55?
I figured we're going to have to hold 975. Looking at the charts this morning, that seems to be an area where we see some congregation. So I do think if we can hold that level, we'll be safe. If we break through it, I do think we could be looking at the contract lows once again.
And corn has to hold what, $4 here? We're just above it.
$4, $3.95 to $4. It has to hold that level. Psychological $4, $3.95 is on the chart side of things. If it breaks through that, I don't think corn will go down to its lows, but I do think it would have a little more pressure left underneath it.
Yeah. What are you watching technically on the wheat market? I mean, obviously we couldn't get through some overhead resistance areas, so now we're looking at support areas, right?
We are, and I follow the Minneapolis market, so I'm looking at about 20 cents more downward pressure in the wheat market. Wheat's performed a little bit better than the other two because of the war premium needed to be added for both the Ukraine and Russia war and Israel and Iran war. So we've had a little bit extra support put into that market, but I think another 20 cents down, and that's major support.
So let me ask you as well, in addition to going into support areas technically, are we going to be down at levels that are value levels where we're going to start stimulating demand? I mean, obviously, we saw some business this morning, both wheat, SRW wheat, as well as some more soybeans.
I think we will. I mean, right now we still are the cheapest, soybeans and corn, I believe, in the world, it's on the export market. Wheat, we're still a little bit above where Russia's at, but Russia has now put out the word they want to cap their price of wheat at $250 a metric ton. So if we see ours drift a little bit, and if we could get our dollar to become a little bit weaker, we might be able to get underneath that and get a little bit of demand coming towards the U.S. So I think there is a chance.
Let's talk about a couple other factors here that may be influencing the beans this morning. CONAB came out with their estimates, first of all, of projecting record corn and soybean production there.
Yeah, they are, and of course they're always looking at a little bit of expansion as far as their acres are concerned, but it looks like they're trimming back on what they think their acre increase will be this year, but they're hoping for an average or better than average yield. So it is surprising to see these numbers, but again, these are some of the first projections. They're just planting. We'll see as the growing season goes.
Yeah, and CONAB on beans at 166 million metric tons, that would be a record, but at least under USDA is what, 169 is what they're projecting?
Exactly, and that's what 300 million above where they were last year. So, million bushels. So yeah, it's a big increase, and they're looking at increasing their acres by 3%. Which if they get this rains come in, they have the potential to get to that level.
We also have notebook crush out this morning at what, 11 o'clock. So what are we looking for there?
I think the average trade estimate hasn't come in like at 170, so it's certainly going to be quite a bit of a recovery from last month. I think last month we came in, a lot lower than anticipated because of a lot of crush plants doing cleans and doing some maintenance. So hopefully we can see a pretty good rebound. I think that'll help stabilize the market, but it's not going to be enough to help push the soybeans or the soybean oil market sharply higher.
Gotcha. And we'll get, I think, export inspections out at 10, delayed a day because of the holidays. So something to watch for there. Cattle market, seeing a little pressure here. Do you think this market is just taking a little break? Is it profit taking, or are we starting to see some hedge pressure maybe?
I think we're seeing some hedge pressure. I mean, we've got a 50% to a 60% recovery from our recent loss. So I think there are some producers, especially those that are, starting to pull calves off the cow and put them into the background or into the feedlots. So I do think there is some backgrounding guys that are looking at locking in some prices for January, pretty good levels. I mean, I would encourage guys to put floors underneath the cattle right now that you're going to feed. So I think there's some hedge pressure going into play. I think some of it is technical too, because of the recovery that we've made. And the market is a little bit tired. So I think that's adding to it. But we're not seeing big sell-offs because the grains continue to be a little cheaper, and that's helping the support.
Yeah, and the cash trade has been strong. That also helps.
The cash has been very good. That continues to increase on a weekly basis, so that is helping. Packers are, they're still showing a little bit of red, but weights have come down just a tish, so that has helped a little.
Okay, so Randy, we talked about the fact that the hog market was the only thing that was higher this morning. It looked like maybe a little hedge pressure yesterday. That market is pretty overbought. Do you anticipate a correction, or will the funds just keep defending this long position they've built?
I would expect just technically they'll see a little bit of a cleanup, especially if cattle go down. Again, like I said with the wheat, you can't really go on your own that much and break away from the herd. So I would expect maybe some selling pressure to come in, test some contract or some support lines. But hogs, I think, will continue to see some strength as we go through, especially if numbers continue to be somewhat, tighter, which, hogs and pigs, farrowing numbers show that they will tighten up a little bit.
All right. Thanks so much, Randy Martinson with Martinson Ag. That is Markets Now.